Thank you everyone for joining us for this webinar, A Brief User's Manual for a Lighting Career, presented by Benny Kirkham. My name is Laura Lawrence and I'm the Global Marketing Director at Harman. Just a few things before we get started. Everyone on the call is muted to keep down noise levels during the webinar. However, there is a Q&A function where you can submit your questions to the presenter and he'll try to answer as many questions as possible at the end. This webinar is being recorded and the link will be made available a few days after this presentation. We do have a number of other webinars taking place over the next few months for audio, lighting, video, and control. And we'd like to encourage you to take a look at the different webinars in our Learning Sessions workshop series on pro.harman.com. We're adding new sessions weekly, so watch for those on the calendar. And now I would like to introduce you to Benny Kirkham, the presenter for today's webinar. Benny has been lighting stages for the past 35 years, working as a lighting technician, director, designer, programmer, and master electrician. His work has included world tours, festivals, themed entertainment, television, film, and Broadway theater. And now I'll pass it to you, Benny.
Hey, thanks a lot, Laura. Hi, everybody. I really appreciate you coming to the webinar this morning. A little bit different sort of a webinar coming from me. I'm a programmer and a designer, like Laura said. And so most of what I deal with are production issues. I deal with, load ins, load outs, and creating the actual shows that people see on stage. But today they've asked me to put together a session that talks a little bit more about the other side of things. It's when you're not on stage, how do you run the business side of one of these careers, and how do you make it work? And just figured I'd jump right into this thing, since it's been a crazy year and there's not a lot of business actually happening right now, to be honest with you. But when things get back going, and we kind of all have hope that they will, we're going to need to have a few tools in our toolkit to maybe be able to move forward and start that business. If you're in a situation where you're working as an employee, how do you move out and become a freelancer? So many people do and follow that path. That it seems like having some knowledge going into it. I've made every mistake you can possibly make going down this path. So maybe it's something I can at least share with you what not to do, but also some things to do. Now, to start out, my big disclaimer is, let me see. Why is this not working? Oh, we go. My big disclaimer: I am not a lawyer, a CPA. I'm not a bookkeeper. I'm not a financial advisor, business consultant. I'm not a therapist. I'm not an expert in any kind of state or federal laws or the tax policy of any government, local, state, federal, or international. What I'm telling you right now is just general information. I'm going to urge you several times during this presentation to seek out professional help of people who went to school for years to learn how to do this stuff. I'm talking CPAs, attorneys, tax consultants, bookkeepers. These people know the details of what I'm talking about way more than I do. I've certainly taken advice from these people to form my opinions of how I run my business, and I would urge you to do the same. If you don't, you're really selling yourself short. All right. Just the basics of how our business works and what makes us maybe a little bit different than other industries. And that's choosing a career in the arts has challenges and rewards that few people outside our world understand or can even appreciate. We got long hours. We got time spent away from loved ones. We've got occasional, intense stress, and some of these shows, it adds up. It can wear away at you no matter how tough you are. Doctors don't understand why we need to change appointments that we've scheduled in advance at the last moment. If a job gets in the way, we understand. Parents and family are confused that we spend the winter holidays. They're fielding calls to try to sort out a New Year's show. And when you go to try to take out a loan on a house, the bankers and your mortgage lenders, they're used to speaking with store managers, firefighters, teachers, chefs, other easily described occupations. They look at us and they say, what you're talking about is a real job? And it is, but not a lot of people understand it. And so it involves a little bit more of an individualized approach in how we conduct business. And some things are just common business knowledge, and other things are unique to us. What are some of the things that are unique to us? Our industry has high employment, way higher than usual right now, but it's always got a certain amount of churn. You've got people moving from project to project, from job to job, just because of the nature of the business. And so you've got a lot. You would have a stack of 1099 forms, or sometimes a stack of W-2 forms at tax time every year. You've got barriers to entry. There's not a lot of clear, there's more than there used to be, but there's not a lot of clear career paths to get into what we're doing. When you start out, a lot of the pay is internship type pay, or it's quite low. Once you have a job, once you are working regularly, the amount of time that you spend with your family and your loved ones can be scarce. And like I said before, that high unemployment leads to low job security. You always have to be looking for that next job when you're on the job that you're on. And that's not for everybody. Once you get established, even if you're well established, it can be difficult to get access to credit because the loan officers, the underwriters, they don't understand the job, and they see red flags in the high unemployment and the low job security. And the fact that they've never heard of it being a real job, that can be a real problem for people like that. Insurance works the same way. And as I said before, there are very few, if any, established career paths. Well, thanks, Benny. Now I'm sad. You got any good news, or is everything hopeless? If, despite the obstacles, you're still the sort of person to press on, if you skipped ahead, ignored all the challenges, and found yourself in the industry already, this presentation may give you an idea of ways to improve upon the success you've had, maybe make things a bit easier, improve your output so that you can chase more projects. For the purposes of this webinar, I've focused primarily, but not exclusively, on the life of a freelancer. That's a category that a lot of us fit into. You don't collect a regular paycheck. Perhaps you receive one or more 1099 type tax forms that indicate you're an independent contractor. We'll talk about how governments perceive your work and how to look at making some decisions on how you can function as a micro business within this industry, because that's how they would categorize a company unit that only has one or very few people in it. All right, how can we make it work anyway? First of all, you want to apply the best practices to your business. You'll learn this in any business school or any business program. You want to always be on time, obviously, and on time counts as far as, showing up at a venue. It has to do with turning in any plots on time, any paperwork, returning phone calls. It all kind of falls into that same category. Responding quickly to problems and requests. Well, that goes along with always be on time, doesn't it? It's just a matter of being responsive to your clients, no matter who they may be, and dealing with problems, whether they're of your making or maybe of other people's making or of no one's making. You respond quickly to those sorts of things. And that's just the sort of people that generally respond to this industry are the sort of people who are always on time, who are very conscientious and respond quickly to problems. Communicating is another thing that some people do better than others, but work on, if you don't feel like you're a good communicator, if things tend to surprise you coming from your clients, then I would definitely work on your communication skills. Communicate more often than you maybe think you need to would be something that's always worked for me. If I feel like things are going very smoothly in a project, my tendency is to leave well enough alone, but checking in is always a good idea, even though sometimes I have to force myself to do that a bit. And of course, this is something you'll see in any business type of presentation. Taking care of the small things makes clients feel like the big things are all taken care of already. The small things are just making sure that that cable is taped up on a truss, making sure that your plot doesn't have any glaring holes in it, that as simple a thing as the date on a plot being accurate to the version number. These are small things. They can be easily overlooked. They can be easily overlooked by a client, but they get noted, believe it or not. All right, getting a little bit more into the weeds, we're going to organize our finances and our cash flow. Biggest thing, man, separate your business finances from your personal finances. That means if you're going to start a business, that means have a separate bank account for your business. That that is square one to making sure that that you can have an organized business. If you start mixing your personal funds and your business funds, there are any number of problems that can stem from that. Some of them are governmental problems that you definitely don't want. Okay, you need to decide how you're going to bill and how you're going to pay yourself. And we'll get into that a little bit in a moment when we talk about business forms, business structures. And if you need help starting out, you're going to need to find help starting out. You know, if that's a mentor, that's great. But just like I said, you need to have some professionals in your life, particularly in areas where you're not particularly savvy. If you need a lawyer to help you draw up contracts or to help you start this business with regard to licensure or with the state, getting your permits set up, all of those sorts of things. Don't be afraid to seek them out. The cost of making mistakes in some areas can be greater than the cost of seeking out a professional to help you out. All right. In our next category, you want to take advantage of the opportunities that you have in front of you. You want to make good purchase decisions based on data and needs. We're going to get into that a little bit when we talk about owning gear and if that's going to be a part of your business that you want to make. And those decisions need to be based on not just, hey, that's the newest, coolest thing, but on some real numbers and some stuff that you might think is boring at first, but the numbers really tell you a good story about what you need to be doing. And then your tax situation, you want to make that decision of how you're going to be paying taxes and what form your business is going to take based on some real solid advice from some people who know what they're doing. And that means professionals, that means CPAs, bookkeepers, attorneys. All right. If you're starting up a company, here are some questions you need to ask yourself. What is business plan and do you need one? I bet you recognize that the answer is probably yes on that. Your client list, who are you going to be working with? Do you already have a group of clients that you work with through somebody else? And are you going to be perhaps working with those clients more directly? Or are you going to be seeking out new clients, in which case you're going to need some kind of a marketing plan? What's a fair price for your services? What's a fair price for rentals? And will this income be enough to support yourself or support a family in that case? How do you protect yourself from somebody who doesn't pay? How do you protect yourself from being sued? Do you need a company name? How do you protect that name? What about a logo? These are all questions that you're going to need answers to, and we're going to talk about a lot of this stuff coming up. Do you plan to register a domain? Do you plan to start a website? Are you going to have a social media presence? And what licenses and certifications will you need in your home state in that locality? And then also, big thing, liability, workers' compensation insurance coverage for your business. All right, to start out with this business plan, you should never start a business without a plan, and it can be loose, it can be tight. A lot of times when a business seeks initial financing, they're going to need a business plan to hand to a banker or somebody who's going to be investing in that business. In our business, as small as we are and as service oriented as we tend to start out, they can be a bit looser, but starting without a plan invites you to get off course. Okay, right here, this may seem a little formal for just one freelancer with some contract lighting gigs, but hear me out. It never hurts to just conceive when something that seems pretty humble now may grow beyond your ability to predict at some point in the future. Why would you not want to control the growth rather than just react to growth as it happens? Bear in mind your company grows, especially if you move towards, acquiring rental stock, capital. Banks are going to want a business plan for small businesses requesting the sorts of loans that it would take to purchase large amounts of equipment. A little planning now guides your growth in the future. And if it ends up increasing your income even a little, it's a good investment in time. All right, business plan. This is a good business plan will guide you through each stage of starting and managing your business. You're going to use your business plan as a roadmap for how to structure and run and grow your new business. Okay, there are forms and there are templates. The Small Business Administration is where I got this one. How you approach a business plan. There's no right and there's no wrong way to write one of these. They come in as many different forms as, say, resumes do. You start out vague early on. You fill in the blanks, and then you can fill in and make it more detailed as these answers present themselves to you. All right, let's get right into this template because I don't want to bore you just talking. First of all, you're going to want to list your vendor. This is from the SBA. I'll show you a version that's a little bit more directed at our industry in a moment. But first, you want to list any vendors, strategic partners, people who are going to be helping you run your business. And then list the ways that you have a competitive advantage. Maybe you have some particular training. Perhaps you have some particular software even that's going to give you a leg up over your competitors. Maybe you are an ace at Unreal Engine, which seems to be the hot thing right now. List any resource you're going to leverage to create value for your company. And those resources are also, they're human resources, they're solid resources, like the equipment that you may have or the software, as I said before, that you may have. And also there are ways that you can leverage the fact that you may be a veteran, the fact that you may be a woman, a Native American. It's all that information is findable on the Small Business Administration website. You're going to make a statement about the unique value that your company brings to market. You describe how clients interact with your business, pre-production, on-site, remote, in-person, that sort of thing. And that's the sort of thing that a banker wouldn't automatically understand about our business, is how we interact with clients. They don't walk through a door with a bell that rings over the door when they come to visit us. It's all done a lot through networking, and they may not initially understand that, but explaining it to them brings you a little bit closer to that banker understanding your position. Okay, you want to be specific when you name your target market. Are you doing previs for corporate shows in the Midwest? Are you doing programming and design for video projects on the West Coast? What market specifically are you serving? And multiple markets counts too. And you want to describe how you're going to be communicating with clients and potential clients. There are usually several channels in our industry. You got trade shows, you got in-person networking, you got social media. And a lot of that, like I said before, and everybody here knows that, it's in-person networking in our industry. That's a huge driver of additional business. And then you're going to want to describe your strategy to pull the most value for the cost your company will incur. You want to make more money than your expenses. And we're going to get deep into that in a moment. And then revenue streams. How do you actually make money? Are you selling services? Are you renting equipment? That sort of thing. All right, moving to something that's a little bit easier to read. I created a little fake company here called Making Light. And let's see, have I got my laser pointer here? Got it. I always forget to do that. Okay, so if you look up here, your identity is just very straightforward, theatrical and event lighting company. You're here to solve a problem, so this is the problem. Clients are looking for a high quality design solution. Well, we could be a solution to that. You want to apply a one-stop concept to executing design services using our elite best practices and our award-winning design team. You can use your big words on one of these. Your target market. The target market seems obvious to us. It won't seem obvious to the people who are reading this. So list it out. A lot of these folks, like I said earlier on, they don't understand exactly what our job is and how all-encompassing it is, the sorts of people we deal with, the breadth of services that we offer. The competition, our competition is very similar in our structure and capability. So if you look over there, our revenue streams, here is what our revenue stream is going to look like. And you see, you go section by section. And if you want to, when this becomes a YouTube, you can pause and kind of take a look at how I approach this and think of different ways that you may approach it based on your personal situation. All right. So how do we get word out other than networking in our business. I made a little chart here based on some information from our friend Brad Schiller, who is with Martin. And I'm going to apologize for it right now because I got the name of his book wrong. The name of his book is Living the Lighting Life. And I have put the name of his book down as That Lighting Life because I am a terrible person and a terrible friend. I even promised him that I would change it and I'd never remembered to. So just bear that in mind as you look at this. How do we promote ourselves in our industry? Well, the biggest one, no surprise, is word of mouth right here. 31% of people use word of mouth. Some of these slices of the pie are also going to be multiple things. So you may use word of mouth and social media, but this is just down to what, say, 1,000 people, if they were asked, what percent would say that they did this and this and this, if you had a list and you could select more than one. Website is a big thing. A lot of us have websites. They're not particularly difficult to put together anymore. There are a lot of website templates out there if you did a little bit of searching. Our industry, unlike a lot of others, relies less on introducing yourself to a bunch of complete strangers. It's rare to see a completely unknown person walk into our world and they need to tell us their story in a marketing sense. Our industry has always been built on personal connections. Your colleagues are people who are known to you, people who are selected for a project because, they've had success in past shows. Often a client will put together a team that remains largely cohesive. Project after project, you've got a master electrician, a programmer, we're talking just a lighting team right now, a designer or a series of designers, series of programmers on very large shows. And those teams will work on project after project. Those kind of repeat clients are obviously very valuable to have. Over time, new long-term projects come along, other long-term projects go away. That process of inquiring and networking to pursue new business, it never ends. Because those projects have a certain amount of churn to them. You hold a show for years and then through no fault of your own or anyone else's, that show goes to another vendor. And maybe you have another show that had just started developing a relationship with a client the year before. Well, that show becomes your yearly show that you count on. But that process of inquiring about new shows and networking to pursue new business, it never really ends. Now, just going through a couple of these, obviously word of mouth is the biggest. Reputation is so valued in our business, and word of mouth, obviously the most authentic type of advertising that you're going to have if somebody gives a personal testimonial for you. Let's see, one thing over here, business cards. You don't think about them much anymore because they almost seem antiquated, but they're inexpensive. And they're tactile. You can touch them. If you look at it this way, I've probably given out 100 cards for every one callback I've ever gotten. And that sounds like a rotten return. But if that one callback gets me one day of on-site work on a project and an introduction to a new client, that's a huge return on investment. You look at the price of 1,000 business cards compared to the day rate you can get from one day, huge return. So think about it that way, because, even though they seem super old fashioned, when I started putting this thing together and I looked at what the numbers came out to, I was actually surprised at what the return on business cards are. All right, portfolio review up here at this little slice. I inquired with my friend, Jimmy Lawler, because I've never had to do a portfolio review in my life. It's mostly it's largely academic and theater practice. But it's very, very important for people at the beginning of their careers, if they're working as designers in those areas. What they've put together, a body of professional work, solid website is where they transition to, a lot of those sorts of designers. And shout out to my friend Jimmy Lawler, who helped me be educated on that. Okay, and then moving on to another thing, we talked about confirming terms and making sure that you and your clients all understand what the parameters of the show are. And we'll talk about that here. And that's another pie chart and another misnamed Brad Schiller book. You see several methods coming to an agreement on terms of service. I've personally probably used all of these, and many of you have as well. They all represent one thing. They represent the meeting of the minds, the agreement to a set of terms, a set of rules that whatever project or endeavor you're trying to accomplish, it requires. If the paperwork of the agreement is created by the client, it's easy. You read carefully. You make sure you understand what you're reading. Get help from somebody who does understand if you don't, because some of them are written in some fairly opaque language. If you're the one creating the document, the thing you need to be thinking about is this. Does my agreement fully describe all of the material terms of what this project is going to be with no ambiguity? And that makes an agreement binding. And if you have a question of whether an agreement is binding, you should definitely seek out legal advice. I have to say, very, very important, especially if you're creating your own contract, to have a professional review those contract documents. A professional attorney will make sure the document clearly expresses the terms you intend. They may even suggest, additional things that you might want to include. The cost of legal review of a contract, if you're creating one, is really minimal compared to what it could cost you if there's a dispute and you need to have a judge involved in this. And just taking a look at this chart, everything's pretty straightforward. An email is quite often what you'll get describing the terms of the agreement. A verbal agreement is also a sort of thing where, show up at this time and it's going to be this many days and here's the rate. A lot of times you'll get a contract from a client. A letter of agreement is another form of written agreement, and the rules on those vary a bit from state to state. But that's pretty much the confirmation in terms of how we do it. And then, finally here in our charts is a business insurance. This is just the state of where we are, how we do business. After discussion about lawyers, we want to talk about insurance a little bit. That's not by accident. Clients, particularly clients who have projects and permanent installs, and in the corporate show market is another big place. They're increasingly insisting that all the subcontractors and anybody who's not an employee of themselves or a vendor, not an employee of your client, or and vendors count as this as well. You got to provide liability insurance. You got to provide proof of insurance. A certificate of insurance is what it's called. And so that's become a bit of a barrier for some small businesses who have difficulty finding insurance. This survey doesn't break out the different kinds of insurance that may be necessary for your particular situation. And that choice, say it with me, should be made after consultation with a knowledgeable professional on your company's particular exposure. Okay, here's a few types of insurance products that an insurance professional may recommend for you. They may recommend that you get a general liability policy. That's a very popular policy, and that's going to protect you from any liability that may fall to you, whether directly or as a result of being a part of a show where a liability claim comes up. Workers' compensation is another one. That covers medical expenses as a portion of lost wages, rehabilitations and death benefits. If an employee, that means you, should get injured or become ill on the job. And then a third, and this is not a complete list. There are other types of insurance, but the third one, which is a major one, and I wanted to mention to you, is this errors and omission. It's also known as professional liability insurance. It protects your business and your reputation in the event that a client or a customer files a lawsuit against you. Get with an insurance professional and just find out what all your options are and what describe to them what your business is. Business plan helps, and find out what your exposure is to these things. All right. So professional services that we've talked about here, big one is CPA. They can set up your taxes. Lawyer over here, CPA also does business structure and helps you navigate those waters. Lawyer is a good person to have around. Financial help, I'm not sure if that would include a bookkeeper, but often I imagine it would, maybe a financial planner. And here's your website designer over here. Another person, maybe not somebody who went to school quite as long as a CPA or a lawyer, but somebody who has a very specialized set of skills that can help you if you don't already know how to do that stuff. So something to think about. All right, your takeaways from all this professional services talk is this. There are key people who can help you at certain stages to get your project launched. You should add them as you need to move forward and as those questions need to be answered. They each have specific skills that are appropriate to your launch process. All right, so attorneys, this is what attorneys do: their legal consultations, their defense against lawsuits, contract drafting and review, business formation, regulatory compliance. CPA will help you with tax consulting and preparation, helps you with forward planning as you scope out what your revenue is going to be going forward. They can help you with that sort of thing as well. All right, your bookkeepers, your bookkeeping service, cash flow management, talk about cash flow in a moment, your HR, they can handle payroll for you. Payroll can be very complicated. Your website manager is going to update your digital footprint of the company, manage social media, and make sure you've got a very professional looking website. If you've got a website that looks like it uses the latest technology, it's interactive, it makes a big difference in how people see you because that's their first impression of you. Okay, a lot of people have a business manager. You know, they do handle your marketing, they get you introduced to people, they do business development, and they help negotiate the contracts. If you're not comfortable negotiating the contract details, business manager is maybe a good choice. All right, so getting back to how the business runs, it's all about money in and money out. Booked a gig, now what? The moment when you realize you need to be organized is when you suddenly realize you're under pressure and not nearly organized enough to get through it. Let's start with the basics. In order to be a functioning business, whether you come up with a catchy production company name or just doing business under your own name, is that your labor and your capital, your rental stuff, generates revenue, or at least it should. Most freelancers is going to come, your income is going to come as a result of one of two things. It's going to be your labor as a master electrician, as an electrician, as a programmer, as a designer, in lighting sense. That's what we're talking about there. And that's a function of time and days. And your capital. You're going to be renting equipment to the production. If that's part of your business profile, then you're going to make money doing that too. And they're treated a little differently. Your expenses will tend to fall into one of five main categories for small business. You got your monthly expenses, utilities, and rent, and some software licenses as well. Your capital, which is your large purchases of assets, that's going to usually come in the form of debt unless you have a tremendous amount of cash on hand. Your taxes, we'll talk about taxes in a bit. And your long-term obligations, which are some business startup loans and that sort of thing. Okay, revenue. We talked about labor and services. Those are billable tasks performed within the scope of your relationship to the production. Usually calculated daily, invoiced at the end of a short project. Or it could be, in some situations, I've invoiced weekly for longer running projects. And they're going to include on-site time in production and pre-production work. And can be time invoice for just yourself, or if you've got subcontractors, you will be listing that time as well in your invoice. Over here under rentals, you're going to have income from rental equipment. It can be complete systems or as detailed as a pair of consoles or a set of testing equipment. This is usually calculated daily or weekly, invoiced at the end of a short project, or just like in laborers, can be invoiced weekly for longer running projects. And that's going to constitute any billable hard asset, which is a thing that you can rent that is worth money of value. And that's rented to the production under an agreement. And those agreements are just like labor contract agreements. And it can be rented out without you showing up. It's just called dry hired. And that you might want to have a little bit different agreement if you're going to be dry hiring equipment because you won't be there to manage that equipment. All right. And what does a sample invoice look like? I put together a sample invoice using my bookkeeping software, and I want to let you know that none of these prices are necessarily real world prices. But just to throw some numbers down on the page, the project is, as you can see right here, Anastasia. That's a real show. I've had nothing to do with that show. I had worked on a show called Anna Karenina, a ballet, a couple of years ago. And I saw that and I said, well, I'll base it off of the Anna Karenina invoice. But then I said, I'll change the name to Anastasia, not realizing that that is actually a Disney Broadway show. And so my apologies to anybody who actually worked on Anastasia. Some elements that you're going to want to have in your invoice are your project name. You want to up here, you might have a logo. I blacked out logos and addresses and things just to take those things out of the mix. But you want to have your contact name here, which is usually to the attention of your direct contact with the client, and then their address and their phone number all in here. You've got an invoice number. You've got the date that the invoice is placed, and then you've got the due date, and that's going to come into play here in just a moment. And then every item, this is an item for labor here. You have a quantity, and so each unit is here. You multiply it out, and the grand total is over here. You can do this on an Excel spreadsheet. I've chosen to use a bookkeeping software. It makes my life so much simpler because it keeps track of invoices. It takes those invoices and balances my company books between the expenses that my company incurs and the money that it brings in. And wouldn't I love to have big invoices like this year? I think we all would. All right, so that is just a quick discussion of revenue. Your expenses, I put into a bit of a grid here, and it may be confusing. I'll see if I can work this out for you. These are some of the largest expenses that you may incur, or at least some sample expenses you may incur. These are the types of expenses. So if you look at office rent, it's a variable expense, which means that it may vary over the course of your business. You may move your office to a smaller space. You may change how you're storing equipment. So those sorts of expenses are variable. They're incurred monthly. In some cases, it can have a tax impact, and you probably want to consult with someone on that. And it's not deferrable. You can't pay less this month and make it up in future months because the cash flow has dried up. So that's something you count on paying every month regardless. Your travel, usually travel to project sites, is variable. It's going to vary very widely month to month based on where the projects are. And so those costs are going to go up and down dramatically. A lot of those are reimbursable to your client. Has a large tax impact. So you want to look into that and how that affects your tax situation. And are they deferrable? It's possible to defer travel expenses using credit. And software licenses, they're variable. You pay them monthly, annually. This just breaks down how different expenses, how they impact you. And without going through each and every one in detail, you could come back perhaps during the YouTube and take a look at those in more detail. Let's take a look at our cash flow. Okay, in our pretend company, we're looking at projected revenue. Projected revenue, we've got a project January 1st to 15th. It's a corporate show. We're going to make $16,000 off of it. February 10th to 20th, concert tour rehearsals, we'll make $8,000 off of it. These is going to represent a little bit different daily rate between these things. February 23rd to March 5th, it's a trade show. We're planning on getting a lot of overtime. We're going to get $12,000 off of that, and so forth and so on through these shows. Okay, our expenses. Rent is $6,000, due on the 1st, every month, January to June. So you can count on that expense. January to June 2021, the debt service on, say, an SBA loan is going to be due on the 15th. And these expenses line up. Some of these things are monthly. Some of I think everyone I put in here is a monthly expense. Well, let's see how that plays out. We've got what's called net 30, which is the way a lot of contracts are paid off. That means from the moment that they receive your invoice, They look at the due date on that invoice as being 30 days in the future from the moment they receive the invoice. How does that play out? So our January 15th invoice that we placed in the previous slide, when are we going to get paid for that? Well, you're not going to get paid for that until way down here on February 15th. Well, all of this space in between, there are bills coming due during all of this. And so you're not going to see this money until then. Excuse me. The project that ends over here in late February, you're not going to see that until late March. Well, you've just gotten this money, which pays off these bills, and you're not going to see the money from this project until here. And so you get into a situation where cash flowing in doesn't necessarily match cash flowing out. And then you get into a situation with some clients that's net 60. So 60 days after they receive an invoice, you get payment, or 90, which can really create some cash flow problems if you're not prepared for it. Let's take a look at net 60. You're not going to get paid until for a March show, early March show, net 60. You're not going to get paid until early May. Look at all this time down here, and especially if that's a long-term show where it takes you a couple of weeks to finish. You're doing a lot of work and not seeing a lot of money until much later. And so that's something you think about. To look at this in a little bit different kind of chart that references those shows I was telling you about earlier, the white number is how much cash we have on hand. The red is when those expenses hit. So every time you see a red, your white line drops down. If we started this company at the beginning of the year with $10,000, or that was our carry forward from the previous year, every time those expenses hit, we drop. We actually drop below zero funds here. And that's a real problem. You have to deal with that problem through having a certain amount of credit to be able to manage cash flow. And then where you see this green, we get paid. We're getting paid mid-February for this show you finished here in mid-January. And so, as you can see, the cash drips away until another infusion of revenue and another infusion of revenue. By the time you get here into May and June, life's looking pretty good. You've got this. Now, smoothing these numbers out is largely a function of planning and of negotiating in some cases your payment details and your payment terms. Excuse me. And in some cases, it's using credit to smooth these out. Rather than taking these expenses as a cash hit, you end up taking them and putting them on credit to defer those payments until after this green line. If you took all of these payments here that are net 30 and you made them net 60, take a look at what the chart looks like. Much worse, because now your January show, which did pay off mid-February, is now paying off mid-March. And you see you can get into a very deep hole. Even if you're using credit to smooth these numbers out, you've got you're going to be paying a lot in interest to get down to here, and then you're just barely recovering before you go below zero again. So this is definitely something to forecast the revenue you're going to get and plan those expenses. If you're able to defer any of those expenses, it's a good thing to try to do. Okay, that's it for cash flow. Keeping track of payments, payroll taxes, invoicing. That's the work of an entire department in larger companies. As a micro business, these tasks are going to fall to you. Fortunately, there's ways to streamline these workflows so you can focus on the parts of your job that you enjoy. A good bookkeeper, keep track of balance the amount going out of and into your business, produce useful aggregated information that you can use in credit applications and tax filings. If you feel confident enough, there's widely used bookkeeping applications you can train yourself to use. Some of those applications offer live interactive assistance from professional accountants, and they charge a fee for it, but it's pretty convenient. Tax compliance works pretty much the same way. There's tax software that's available that can guide you through a tax filing. Also with technical or user support. All of those items, as complex as they are, there's professional services that can help you with all of these things. Your regulatory compliance, you can work through it yourself, but if you have any questions or if you feel in the least uncomfortable about it, you need to consult with somebody who knows what they're doing. Payroll can be very complicated. Using a bookkeeping service or a payroll service is the way a lot of people go, just because, especially if you're paying yourself, there's a lot of complexities that come down to how paychecks are, the withholding is figured on them, that the taxes are paid on them, and falling out of balance on those numbers can be really problematic with regard to the government. And then human resource compliance. Believe it or not, even with a one-person operation, you have to rely on human resource rules and laws. I have to write letters to myself, even though I am the only employee of my company. Dear Mr. Kirkham, blah, 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 signed Benny Kirkham. It's crazy, but it's what we have to do. So you either got to get really up to speed on the rules, or you have to find outsource or find help to get you through those things. And finally, web development. I'm no expert when it comes to developing websites, but I know that some people are. And when I need help with those things, I consult those people. All right, so you know what cash flow is. We know about revenue and expenses. Another thing that comes up a lot are business structures. How are you going to structure your business? We all have heard about sole proprietors and LLCs and S corps and all of that sort of thing. Just a quick rundown on all of these definitions. The sole proprietorship is how a lot of people start out. You own an unincorporated business yourself. Super easy to form. In fact, if you are working not under any corporation or any incorporated business, you're going to automatically be assumed to be a sole proprietorship. Your business assets and liability are not considered legally separate from your personal assets. And you're going to have difficulty raising funds should you ever need to do loans. You're going to have difficulty raising funds, I should say, as a business. You can still raise funds yourself. Partnership, which a few people in our industry have, a lot of design partnerships exist. It's two or more people with a joint ownership. There are liability limitations depending on the partnership structure. You could do a little bit of research on that. And all profits from a partnership pass through to the owner's personal tax returns. And pass through is a buzzword that we learned a lot about with the last tax bill that went through in 2017. And I've got a chart to show you how that works and coming up next. But the quick version is all of the profits they go through the company and become considered personal income of the owners of the company. The corporation itself is not considered to be an entity that earns money for itself. Okay, the next one over here I've got is the C Corp, or just a regular corporation. That's the Inc. If you've got INC period after the name of your corporation, you are a C Corp. They are a separate entity from the owners. They can be separately taxed. They do separately earn money themselves, and they can be held legally liable. So they are an entity in and of themselves. They're like almost considered a person under the law, a corporation is. And they have the strongest liability shield between the corporation and the people who own it. And they are most complicated to set up. Okay, an S Corp is similar to a corporation. It is an incorporated entity. It does have a pass-through, so that the individuals are considered to have all the profits on that. One limitation that not a lot of people know about is that all the shareholders of an S corporation have to be U.S. citizens. I didn't know that before I started researching this. And then there is some special paperwork you have to file with the IRS to get S corp status under taxation and business organization. All right, and then finally the LLC. A lot of us are LLCs. Those are created by states. Those are not a federal type of creation. They profits and losses once again pass through to the owners, and the members are considered self-employed. They have to file taxes as sole proprietors. So this right here, tax-wise, the limited liability company is considered the word is a disregarded entity. So it is disregarded when it comes to taxation. The profits and losses are going to pass through, and so you get treated like this for taxes unless you elect to file taxes as one of these other forms. I think you can elect to file as an S corporation. You can elect to file. You may be able to elect to file as a corporation. I admit I'm not really sure on that one, but that is a way that a lot of people go. And once again, I'm going to urge you to seek some really smart professional help to guide you in which sort of business structures you're going to choose for your particular business.
Excuse me, Benny, real quick. Benny, excuse me. You've got a thing on your screen. You might want to turn on your other screen.
Oh,
your break time.
I can't get rid of it.
I just wanted to let you know.
Oh, thanks, man. All right.
There you go. Thank you.
Appreciate it. I didn't realize that was visible. Okay. I told you I'd get back to pass-through. Here's what pass-through does. It's you've got the revenue coming into the entity, what you're calling your company. That company is not considered an entity that can pay taxes according to the federal government. If it's one of those structures, it doesn't. Your wages are paid directly to the employees out of the company, regardless of their ownership. The income, unlike income taxes, payroll taxes are paid by the company, and they come to you or to your employees. And then tax liabilities, your profit, which is your net income after you take out all of your expenses, including wages, those profits will pass through to strictly the shareholders of the company, not necessarily employees, but shareholders, and those won't be separately taxed. And then the owners aggregately, they pay taxes on profits and wages separately. So you're paying payroll taxes on wages through the company, and you're paying taxes on the profits of the company individually as shareholders of the company. Okay.
Benny, I'm sorry, Benny, it's back again.
Oh my gosh, this thing not go away.
I really want you to take a break, I guess.
I wish I'd never installed this.
Yeah, there you go.
All right. If it comes up again, let me know. Okay. So sole proprietor is the most common part. Is the most common choice that people make. And then LLC, a lot of people choose to make themselves into an LLC, and they deal with their income and taxation that way. And then full corporations, and it's not broken out here, but I imagine that is S Corps and C Corps are this slice of the pie right here. LLC is a bit of a chameleon, as I said, since the setup of an LLC is defined by state law and not by federal law. There's a certain amount of flexibility how an LLC is regarded by the feds, the IRS in particular. An LLC can elect under some circumstances to be taxed as a partnership or as an S or C corporation. I guess I did do that research with all the advantages that come with those structures. All right, owning equipment. Can I make money owning and renting equipment? What is the stability of your client base? Do you have people who are going to be willing to rent it from you? That's a big question to ask yourself. What is the monthly cost of owning the equipment? And that's not just what you're paying on the note for it, but it's also what does it cost to store it? What does it cost in maintenance costs? Those sorts of things are big considerations. A lot of people end up spending more for those sorts of expenses than they expect to. And just going along with that, what the potential outflow of funds linked to the equipment, overhead, and debt, service, and maintenance. You're going to want to recoup 2.5 to 3.5 of the purchase price of any equipment per week, conservatively. And that's depending on the expected lifespan of the equipment. So over 2.5 to 3.5%, and you think, well, okay, 2.5% in, what is that, in 40 weeks of renting this thing, I'm going to be set. I'll have the thing paid off. But That's only going to be the case if you have no expenses and in 40 weeks, you have 40 straight weeks of rental. Not usually the case. Let's take a look at a 100 to 130 week payoff on that loan. And of course, controlling maintenance costs can make the difference in profitability on that. Let's take a look at just an example of a piece of equipment that costs $40,000 and all of the numbers that you're going to be dealing with to make that work. Okay, we got a $40,000 purchase. You've taken out a bank loan at 7.5%. Your maintenance and your overhead is going to run about 10% a year. And you're able to rent this piece of equipment for $1,000 a week, which is 2.5% of your purchase price. And let's say your equipment is booked around 50% of the time. Here's how this works. Here, these blue lines here are overall how much money you've made total on this thing. Your white lines are how much money you've spent total. So obviously you're counting on, you're cheering for the blue lines to beat the white line. You want to make more money over time on this piece of equipment than you spend on it. So here's what happens. Just over the course of a random 50% of weeks at this number, over the course of 102 weeks, you have spent $44,000 on the piece of equipment, but you've earned $47,535. So you've turned a small profit on it. You've turned a profit of 4.4%, what they call return on assets, using these numbers as a guide. And these are random numbers, not random numbers, but these are just hypothetical numbers. 5% return on asset is considered a good return. Some of the factors you got to think about are your storage costs on overhead, your insurance that you'd have to pay against loss or damage on these things, which you should definitely look into if you've got expensive equipment and you want to insure against theft, against water damage, against any damage that could happen on on site, loss of use. Spare parts and labor is another overhead cost that people fail to take into account sometimes. And subrentals. If your equipment is in the shop and you have a gig to take care of, you're going to need to rent from somebody else to make sure that client is taken care of. You're going to account for demand. Demand can vary a lot. In some markets, I'm in Las Vegas, seasonal demand is huge. It varies so much that some parts of the year, nobody's got equipment. In some parts of the year, the warehouses here are full. And so your utilization of your equipment is going to spike and dip pretty dramatically at times. And then your pricing is going to be flexible. You're going to want your pricing to be a little flexible to keep that business, to keep revenue coming in, even if it's at a little bit lower level than that 2.5 to 3.5%. You want to be thorough calculating your overhead. You want to make sure you account for storage and those sorts of hidden costs. And you definitely want to take a look at insurance. Okay, what's going to happen if we take that same hypothetical piece of gear and we bump up our rental price? If the market will bear us bumping up our rental price, even 10%, well, it's going to look like this. All other numbers are the same, $40,000 purchase, maintenance overhead 10% a year, but you bump the rental price up $100, just $100 a week. A number that probably can be negotiated maybe half of the time. You keep the equipment book 50%. Your net profit jumps from $3,535 to $8,135, which moves your return on asset from 4.4 to 10.2 over that same 2-year period. And you see the blue lines are beating the white line a little bit more convincingly here. And then finally, I want to take a look. Let's say the piece of equipment you're working on is going to last longer than 2 years. And you think about a 2-year life on some lighting fixtures, perhaps some other pieces of equipment. But let's say a console might last you 8 years, 6 to 8 years and it's still essentially the same console. You just upgrade the software, which is generally a free upgrade. Let's take a look and see what happens there. Well, this is what we saw before, where the line comes up and blue beats it out by a little bit. But once your costs level off after you pay off the piece of equipment, that longer lifespan really works in your favor. Your profit, your net profit on that piece of equipment after 6 years is $101,900, which, remember, 5% is a good return on asset. You could potentially be looking at 29% almost return on asset. And this is just hypothetical numbers. You have to run these numbers yourself on any piece of equipment you intend to purchase, and seek help if you need it. But yes, you certainly can make money renting equipment. A lot of people have. A lot of people have grown their business from just a person with a console, and they pull the rest of their gear around in a trailer. Matt Shimamoto, Volt Lighting, he started off very small, and he has got a marvelous business running now, and he's got the respect of everyone around him. He takes care of his clients, and he has been very careful with how he has built the equipment that he has in inventory. He makes sure that all of that equipment is making money for him. He's a really smart guy. All right, so moving on. What equipment is going to have the best return? Here's your takeaways. You consider the lifespan of the piece of equipment. The longer you can rent it, the more revenue it's going to generate after your initial costs are paid off. Once you paid the thing off, you're making a lot bigger margin on it. Your overhead costs, your utilization, those are the key to any capital purchase decision. You look at what some of those hidden costs are, and you look at how much you really can realistically keep that gear working. And then controlling those maintenance costs can make the difference in your profitability. Now, last thing I want to talk to you on this is your changes in technology, and one in particular is the shift over to LED lighting. LED lighting has allowed a lot of our fixtures in lighting to have a much longer lifespan and to have much lower overhead costs with regard to some of the heat damage that hotter lamp sources used to cause, and fans that require maintenance, but also just swapping out those bulb sources over time. That sort of overhead cost does tend to add up, and I'm sure the good people at Martin can speak to that as well. All right, so that's the end of owning gear. Maybe we can ask a few questions about that when we get to Q&A. But my friend Corey Walker, who I had check out a lot of my numbers on this, he's out at Christie Lighting. He left me a quote. He said, "Good business management is a product of making mistakes and learning from them. Just make sure that those mistakes aren't fatal." And I thought that was a pretty good quote, and he agreed to let me insert it. All right, taxes. And we'll do just a quick section on some of the taxes you could be looking at. Of course, you want to have a professional look at your tax situation, but excuse me, the basics are this. You're going to be paying personal federal income taxes on any pass-through business. You're going to be paying personal, in some cases, state and local income taxes. Not every state, but most states have the state income tax. Your company, depending on how it's structured, may be paying payroll taxes, or your company may owe corporate, federal, state, and local taxes and licensure. In some cases, your rental equipment or any office space that you own will also incur property taxes. And then if you actually sell things, let's say that your company, in addition to renting gear, sells gel, sells fog juice, sells gaff tape. Anything that's a sales taxes can also be incurred by you in some cases. Sales taxes can become very complicated, so you should definitely do your research on those. Use taxes are the opposite of sales taxes. Use taxes come in when a company purchases an item tax-free in another state and then brings it in for use in their state. All right, your self-employment taxes. Self-employment taxes are something that most sole proprietors are going to be very familiar with. It is the taxes that you pay from your income on a Schedule C IRS form. If your net earnings are greater than $400 and you're working at a job that does not withhold Social Security and Medicare, you're going to have to pay self-employment taxes, which are really Social Security taxes. There are specific exceptions for some member of the clergy, probably doesn't apply to a lot of production people. And if you have employees, including if you yourself are a W-2 employee of your company, you're going to owe other sorts of employment taxes, Social Security and Medicare taxes, federal income taxes, and your FUTA, federal unemployment taxes. You can streamline these processes, as I said earlier, by enrolling enlisting a payroll company. There are entire companies that do nothing but handle payroll for small businesses. Payroll, at least to me, and I'm no dummy when it comes to this stuff, payroll's hard. If you have employees, even if your only employee is yourself, and you choose to pay yourself with a regular paycheck, which has advantages, you should check out some of these services. You don't have to buy them, but at least look at them as an option. Depending on the service, they can print paychecks for you on your behalf. They can manage withholding. They can make the employment and FUTA tax payments. They can make those electronically and on schedule, and deliver your end of the year tax forms to you as well. The fee is usually per employee to some degree. It can be pretty reasonable for a small business because it's per employee. It's your choice, but it's worth looking into it. It's possible that you're much more of a bookkeeper than I am. I'm certainly not. Okay, so the income taxes that you pay on the profit of a company, as I said before, the C corporations are taxed according to the Tax and Jobs Act of 2018, the big tax cut from a couple of years ago. Corporate income tax is a flat 21%. So if you've got a C corp, flat 21%. That makes C corporation taxes sort of easy. The company's a tax-paying entity. The tricky bit gets into how it handles dividends, and it's a little complicated and wonky. I'm not going to go too deep into the dividends, but it has to do with how long that the underlying stock of that corporation has been held. And if you want a deeper dive in that, you're going to need to probably talk to a CPA. Okay, all of your pass-through entities, your S-corps, sole proprietors and LLCs and partnerships, all of those are dealt with in a pass-through way, just like it showed on that chart. And you'll receive your income on a form called a K-1, and that just gets added into your normal income, and it's taxed in that way. But it's not subject to self-employment tax because it's treated a little differently than that. Your sole proprietors are going to receive 1099s from clients, and those are going to be reporting the contractor payments to them. You'll also, if you have one of these other structures, receive some 1099s as well, just as a confirmation, but you need to be keeping track of all of that revenue from every company that you are getting paid by. That is on you to keep track of those numbers. All right, state taxes. Yes, there's more. State taxes. Some charge corporate taxes. Some states levy personal taxes, local as well, corporate and personal. Fewer localities will charge taxes than states. In many locations, property taxes can be a factor. If you own commercial property, that's rental gear, that's an office, that's a shop, they'll subject you to annual property taxes. Those are usually assessed at the county or the civil level, not civil, at the city level. Okay, sales taxes, those are usually assessed by the state. If you sell things, you're going to be responsible for collecting sales taxes in most states. I think Oregon may be the one exception. There are a couple of exceptions. And then use taxes. I think I touched on these a moment ago. Those are used as an alternative to sales taxes. Those are taxes on purchases that you make outside the state and bring into the state. They're meant to be like an alternative tax for anything that would not have collected sales tax in the first place. So you buy a piece of equipment out of state, it's a company-to-company transaction. You don't pay sales tax on that. You bring it back to your state to use. You actually owe use taxes on that in some cases. Okay, and then finally, when it comes to taxes, we've got licensure. Some companies are going to require licensure through the federal government. You can think of which ones those would be. Pyro companies, require licensing through the Bureau of Alcohol, Tobacco, and Firearms, for example. It comes down to state licensure. States generally charter companies. In many cases, those registration and name searches for new businesses are handled through the Secretary of State for that state. So when you go searching to see if your company name is already taken, you'll be looking at, in general, depending on your state, the Secretary of State's office for that state. Sales tax also often issued by the state. Okay, local licensure. In some cases and in some types of business, local license is also required. You need to look into that and do your own research because every locality is going to be a little bit different. You're going to do your research to avoid those surprises. Excise taxes, they're also called sin taxes, and those are levied against tobacco, cannabis businesses, any place that offers alcohol, gambling, those sorts of things. In some cases, bars, venues can be subject to excise taxes. You just need to do your research on those things. And as a final thing, things to remember. You're going to want to get a tax ID number from the IRS for your business, even if you just plan to operate as a sole proprietor. If you grow, you're going to need one anyway. It's much safer than using your personal Social Security number to conduct business operations. There's a lot of forms that tax ID number ends up going on. You just don't want your Social Security number out there that much if you can help it. You want to keep a separate bank account. It may have been the very first thing I said in this presentation, but it's very important to separate your business assets from your personal assets. You want to look into it using your bookkeeping software or tax software to keep yourself organized and to keep your business under control. The complexity can drive you crazy. Keep your records secure. For tax records' sake, as well as your personal privacy and security, make sure your business records are confidential and they're secure with a solid data backup on those. The last thing you want is to have records that you need to get a hold of that are no longer available. And you want to seek, I'm going to say it again because I've said it 10 times already, you want to seek professional advice on any decision regarding your company form, your company governance, your company tax strategy, even your strategy going forward with regard to how you should pay yourself, what you should pay yourself, and any capital purchases you intend to make. If you're confused at all, just go to the pros. That's what they do for a living. All right, so that's all I have for y'all. I'd like to thank everybody for your attention today. I know a lot of this subject gets a little dry, but some of it is just information that people don't generally know starting out, and I hope that it's done you some good.
All right, Benny, you ready for questions?
Always ready for questions.
Awesome. We do have some. The first one is asking, how do you find good professionals such as CPA and lawyers that understand our industry?
That is a tricky thing. A lot of it comes from word of mouth. If you know someone who's established already, and a lot of that comes down to networking, ask them who they go to. That's exactly what I do. There's almost always a single CPA who handles taxes for everybody who does production in a certain area. I know that there's one down in Austin, in fact, that's handled a lot of my friends' taxes, and he gets it. You don't have to spend a lot of time on the phone explaining such things to people.
Okay, next question is asking, in general, what percentage of your income goes back into the operation of your business?
It would depend on how you've got your business set up. My business personally is mostly services. And so a lot of my net profit just flows straight through and becomes personal income. What I put back into the business in the form of making sure that my software is up to speed, that I have enough of a cushion in the business to be able to take a hit cash flow wise. Let's say you keep 50% of your net profit in the business to be ready for capital purchases, to be ready for a cash flow hit, especially in our business where things can be a crazy roller coaster some years, is probably pretty prudent.
All right, next question is asking, how likely are programmers or designers sued and for what types of reasons?
There is no end to the number of reasons that a person can be sued. It doesn't even necessarily have to do with anything that you yourself may do or anybody even on your team may do. A lot of times a lawsuit gets filed, and it gets filed against a great number of people who had nothing to do with it, but they were all on site at the time. There have been several high-profile liability lawsuits over the last 5 to 10 years that you can look up. One of them was the Sugarland tragedy that happened at the State Fair in Indiana, maybe, and that was a case where the lawsuits were broader than you would have imagined, as far as the number of people who were subject to depositions and named in that suit. So having liability protection protects you, even if the problem cannot be directly traced to you, just as a shield.
All right, next question. Does owning a console help someone get more programming or design gigs?
Well, it depends. It depends a lot on the market that you work in, and it depends on just how you plan on marketing yourself. Think about who you're competing against. If you are in a long-term project where you are where the equipment is built into the system, and you can come in and charge what's called a kit fee out on the West Coast, where I'll come in and I'll bring my consoles for X amount of money, then maybe you can negotiate that. If you're coming into a tour, maybe it's a different situation. You've got a vendor who's willing to be much more flexible on price, is able to be much more flexible on price than you as a small operator can be. Well, you might not get the rental at that point. You just have to look at your personal situation to see if with your market and with your clients, you can make that deal work. And then you kind of price your utilizations based on that.
All right, next question. I am 2 years into working as a freelance technician. When is a good time in my career to set up a business versus just operating as myself?
I think right away is a good time to set up a business myself. I'd suggest setting up an appointment with a CPA. It's a relatively minor cost compared to the amount of money that you could save going forward, and start looking into what the step-by-step process is in your state to make that transition. Because having the additional protection, yeah, Brad, I see it. Having that additional protection and having the ability to pay yourself, the improved tax situation. There's a lot of advantages if you're set up correctly and if your situation is appropriate for it. I would say as soon as you can, at least look into it and see if it pencils out for you.
All right, the next question is asking if you can explain your hat choice. Is there a story there and the first time you decided to wear it?
That's got to be somebody who knows me. I've worn a hat for years because I have long hair, and as I've gotten older, it's become more broom-like, and it falls into my face, and if it touches my nose, it makes me crazy. I start doing this. So that's the point of the hat. And I just like green.
All right, next question. How do you think the industry might change in regard to banking practices and such due to COVID when trying to secure financing and loans to start a production company?
That's a good question. As far as banking practices, they're looking, just like insurance companies, they're looking at risk. And the risk, we're looking at risks for our business that we never recognized existed as little as a year ago, that we could shut down an entire industry. Excuse me. We could shut down an entire industry for, 8 months and counting now. This is unprecedented. I'm not really sure what is going to convince banks to start lending to our business again. I think it's going to be proven income, and the fact that if we get a vaccine, if things start moving forward again, if we start being able to have large gatherings again, these are all questions that I think everybody wants to answer right now. We don't have any clear answers just yet.
Yeah, very true. Next question. How would one go about getting a signed copy of Living the Lighting Life and the Automated Lighting Programmer's Handbook as well?
I'll pass that off to Brad.
Thanks, Penny. Both of my books are available on Amazon and other online retailers, so easy to find. And then when we can all get together again, I would be happy to sign your copy. Just bring it to a Martin Roadshow or a trade show or somewhere where I'm at. Happy to sign it.
Thanks, Brad.
Sure.
A couple more questions. How often do you do a deal memo or contract versus a gentleman's agreement? And how do you decide which is best for the situation?
I'm more likely to want paperwork from a client I've never worked with before. That's really what it comes down to. I would be shocked if anybody that I work with regularly were to not come through. You worry more about non-payment than it's an actual problem. I've been doing shows for 35 years now. I've been independent for over 20 years now, and I have lost exactly 2 days to non-payment over that amount of time. So it's really not, or at least maybe I'm just that lucky, but it hasn't been as big of a problem as I had ever thought that it was going to be. If there are complicated things that need to be agreed to, some insurance that needs to be produced, or the payment schedule is really complicated and you just want to avoid human error and misunderstandings, that's more the reason that you'd want to have something on paper than thinking that somebody's going to run off in the night and not pay you. This is a small industry. We all know what each other is doing, and I just don't see a lot of clients trying to rob people of their labor. It happens. I'm sure it happens, and I've heard of it happening, but it's not real common. It really isn't. Reputation means a lot.
All right, we have one final question here. In running your business, how often do you take a break?
When the phone doesn't ring. I've been taking quite a long one this year. I always have been a big believer in you've got to take the shows while you got them, because you never know when you're going to have a dry year. And that doesn't mean that I never take vacations, but I schedule those vacations out and block off those days. And then I don't take shows during that time, but any other time I'll generally take any work that comes down the line, because I like to take care of my clients.
Excellent. Well, thank you so much, Benny. It's always a pleasure having you present with us. We truly appreciate it.
Oh, it's my pleasure.
Wonderful. In case you didn't know, tomorrow's session will be Brad Schiller presenting the ABCs of lighting terminology. So if you haven't registered, we would love to see you there. And you can register on pro.harman.com to view any of our upcoming sessions, and also to get to the link that takes you to the recorded sessions. So thank you so much, Benny. Thank you, Brad, for assisting on some of the questions. And we look forward to seeing everybody at future sessions. Have a great rest of your day.
Take care.
Thanks, Benny. Great job.
Bye, Benny. Thank you.
Bye, Heather.